I'm sure this is how you must be feeling right now. This must be the biggest decision which you're taking. You've finalized that you're going to go ahead and buy your dream home. Now that you've made that decision emotionally, it's very, very important to budget this decision out. That ensures that your eligibility is to the mark when you go out to explore different properties. It shouldn't be a case that, hey, you landed up liking a property which is 4.5, 5 crore rupees and your loan eligibility is only 2 crore rupees. To avoid such dissonance, I'll help you over the next 5 minutes to ensure how banks look at your loan eligibility and how you could go through this entire checklist and ascertain what is your loan eligibility. Even after this video, if you're confused or you want to know more, you want to be absolutely 100% sure in terms of what your loan eligibility is, feel free to reach out to us. I'm Mangesh, I'm the founder of Peaceful Loans. At Peaceful Loans, we ensure that you can get your dream home loan sanctioned with complete peace of mind, where my team will guide you at every step to ensure that you don't feel any amount of anxiety or confusion at all. Now let's not keep bank as a black box. Let's try and go inside this black box and try and understand the logic, how banks operate, why banks give higher amount of loan, lower interest rate, or anything for that matter based on these different criteria. Let's first discuss the criteria, which is your income, and a concept called as FOIR, which is fixed income obligation ratio. Both of these combined together is extremely important in defining your eligibility. Now, in income, banks will only consider income which is on paper, which is, if you're a salaried person, it's seen through your salary slips for last 6 months or Form 16. If you're a self-employed person, whether you're a professional like a CA, doctor, or a lawyer, or whether you're a businessman who runs their own business, then it is looked at from your business income standpoint. In all these cases, income tax return or ITR filing for last 2 financial years is a proof of your income. You may have income beyond this current ITR declaration, but bank looks at it from a product lens called as surrogate income product. These are the 3 fundamental ways in which bank assesses your income. And income is a proof of your cash flow coming in every single month, which reduces bank's risk to give you commensurate amount of loan. As a thumb rule, if you were to look at any EMI calculator, you would come across, say, a 10-year loan at a 9.5% or 8.5% for 1 crore. These numbers put together, the EMI which comes as an amount is a great way or a great thumb rule to have, that if you want a 1 crore rupee of loan and the EMI for that is 80,000 rupees, that means your salary per month post-tax should be 80,000 rupees and above for you to avail this loan. If it is not the case, then you'll have to find other ways of increasing your financial eligibility. Now, it doesn't stop at income alone. We start at the beginning of this section, we discuss something called as FOIR, F-O-I-R, which is fixed obligation income ratio. In this, what banks look at is not only your income, which is, say, your top line or revenue, which for a salaried individual could be your monthly salary minus income tax is what is credited in your account, which is called as in-hand salary. But what if you're paying 50% of your in-hand salary already in the form of EMIs for your car or some other small ticket size loan which you bought, right? In that event, only the remaining part of your salary, which is, say, free cash flow, is taken into account while comparing your eligibility from an EMI lens, which we discussed. So in this case, your salary minus income tax minus your EMI should be greater than 80,000 rupees, which we discussed in the earlier example, for you to be eligible for that 1 crore rupee of loan. I hope this gives you some clarity in terms of how do you look at your income. And a pro tip here is, if you don't have enough income on paper, but there are surrogate ways to prove, then your choices of lenders reduces, but that doesn't mean that you will not have ability to get that loan. Beat any of these cases, right? The best way to approach this problem is to speak to an expert advisor at Peaceful Loans and get an understanding of your eligibility beyond this thumb rule. The second factor, bank looks at you as a risky or less risky or premium sort of a consumer, is your age. As we all know, our ability to consistently have the same income reduces as we grow old. So banks look at the younger the age, the better it is from bank's risk standpoint. Of course, that doesn't mean that an 18-year-old who doesn't make any money is considered as low risk. It's a combination of your income plus age. More often than not, most financial institutions have an eligibility of 21-year to 65-year-old as for a home loan product. But 65-year-old may not get a 30-year long tenure in a home loan, versus a 21-year-old could get a 30-year long tenure. So the tenure reduces as your age increases. Now, of course, there's a way around this as well. And a pro tip here could be that you add a younger, financially good cash flow person from your family in this loan structure as a co-applicant. That ensures that your tenure can be increased. Now, the next important factor is your credit score. Many a times you would see people talking about it, or a slang used or a commonly used term for this is CIBIL. But CIBIL is one of the bureaus from where your credit score can come. It could come from Experian, it could come from CIBIL, it could come from any other bureau in the future as well. Over the last few years, as the banks are moving their decisions slowly towards digital means of taking decision versus humans making that decision on credit worthiness, credit score is becoming more and more important. As you know, the credit score has a range from 0 to 900. But ideally, a great credit score is 750 CIBIL and above. A poor CIBIL score or a credit score is 650 and below. Now, anything between this 650 and 750 and above can actually avail home loan. But keep in mind that a person who has an 825 and above CIBIL score may get a loan at a 25-30 basis point, which is 0.25% cheaper than a person who's at, say, 700 or 750 CIBIL score. For you to know exactly what would be the interest rate you're eligible for based on your credit score, please feel free to reach out to our team. We've had examples of our customers who've had 787, 790 CIBIL score. For one financial institution, the loan available was at, say, 8.15%. And the other financial institution has the maximum slab of 750 CIBIL and above, you get the same interest rate as 825 and above. So we are always in the right position to recommend you that financial institution where you can save the maximum amount of money. So to ensure that you get the best deal and save maximum money, do reach out to us. Next important factor from assessing risks perspective for a bank is employment stability. Now, anybody who has a vintage or a history of working consistently for last 2-3 years, and it reflecting either in terms of his salary slips, Form 16s or ITR, whether he's self-employed, salaried or a professional, is a good indicator of consistent income from bank's perspective. As you should understand that these are very long tenure loans, 10 years, sometimes 15 years, sometimes even 30 years. And if you have a patchy income pattern, then bank looks at you from a lens of high risk candidate that essentially is always compensated by lower sanction limit or higher interest rate. So consistent income before you get to this phase where you can apply for a home loan is a primary criteria for banks to look at you from a higher sanction limit or a lower interest rate perspective. Now, the next important factor is a property type. Now, the property could be from a top builder which already is in pre-approved list of these financial institutions. Your ability to get loan faster is always greater in this part. Also, this may turn out to be cheaper because this is a pre-approved property. Bank has already vetted all the documents of this builder. The second phase could be property where all documentations are clear. Say, in case of Bangalore, it's Khata properties, right? In case of Gurgaon, it would be Huda properties. There are many such examples which are considered as a low risk type of property. Now, the more riskier properties could be properties where the OC is not received. So, older properties in Bombay largely don't have OC. So, these properties become riskier property. Properties purchased from an auction from bank where the earlier person who's taken loan has not paid back, but this is available at discount. All these properties are considered as a high risk property. One is that. The second is where the property is located. Now, banks have different home loan products based on tier 1 cities, tier 2 cities, tier 3 cities. More often than not, tier 1 cities have better loan terms as compared to tier 2 and tier 3 cities. This is the next factor to keep in mind when you're looking at home loan. Now, we discussed all these factors which could affect your eligibility. To summarize all of them, yes, banks want everything to be the best. That means you should have great income, you should have stable income, you should be young enough, your property should have clean documentation, and it should be a great quality of property. Now, some of these terms are very, very subjective, and it's bound to be the case that beyond this conceptual knowledge, you would still be confused about your eligibility. But don't be worried. Please book a consultation call with our experts, and our team would ensure that they'll get on a call and help you for your specific case to find out your eligibility. And the link to book that call is in the description box below. When you approach Peaceful Loans expert advisor, what should you expect? We don't only get you home loan, we ensure that the entire journey is peaceful, you don't have a buyer's remorse at the end of it, and you have the best deal which is possible for your circumstances and your financial situation and the dream home which you're trying to buy. Now, if you liked our content and if you've stayed till the end of this video, I'm sure you found some part of it valuable. As a vote of confidence and encouragement for my team, so that we can continue producing more and more content which could help many such people who are in similar shoes like you, please like and subscribe so the next time we put up a video, you can get a notification so that it could help you further.